Good morning, investors and traders. This is Naeem Aslam, Chief Market Analyst at Evertrade, and welcome to our daily technical analysis video. In today's analysis, we'll be looking at Dow Jones, which snapped its winning rally, and that winning rally consisted of 5 consecutive days. So let's have a look at the price and then let's perform a bit of a more surgical technical analysis on that and then see where those important support and resistance levels are. As always, it is important for us to go through this disclaimer. Anything which will be discussed cannot be perceived as an advice. If you are seeking for one, please do consider consulting with your own financial advisors. Now, as always, folks, we are going to focus on the Dow Jones daily chart, and we will begin by looking at the price action from the daily from the daily time frame perspective. So, before we begin anything, it is important for me to mention three important moving averages which are on this particular chart. Firstly, it is your 200-day simple moving average in green, followed by that is your 100-day simple moving average, and then finally your 50-day simple moving average. Now, clearly the price is trading above all the three important moving averages, which is quite an important sign, and that confirms that the bulls are in control of the price. More importantly, as long as the price continues to trade above these moving averages, we literally have not to worry, we don't have too much to worry about in terms of this particular trend, because price is very likely to continue its journey to the upside. The second thing that we need to focus on in terms of the price analysis is the Bollinger Band. Now, Bollinger Band is defined by these blue lines. The one on the top is the upper level of Bollinger Band, and the one below is your lower level of Bollinger Band. And within that, you have your 20-day simple moving average. Now, the rule to trade with Bollinger Band is that the moment the price pierces the upper level of this Bollinger Band, like it did over here, it shows that the price has gone too far and too fast, and then that means retracement is due. And exactly that is what happened over here. When the price did cross this particular price levels, the correction started to happen, which pushed the price near towards its 20-day simple moving average. Now, on the contrary side, what you also have is the lower line of the Bollinger Band, and the moment the price crosses below the low or comes outside of this Bollinger Band, it shows that the price is oversold, hence a correction is due, and then that pushes the prices back up. And then this really happened over here as well. Price fell, came out of, excuse me, came out of this lower line of Bollinger Band, and then it quickly reversed its direction and went all the way towards the upper level of Bollinger Band. Again, another example of price piercing the lower level of Bollinger Band over here. Another one, price piercing the high upper level of Bollinger Band over here. More recently, price did pierce the upper level of Bollinger Band, but the correction didn't really happen. But now the price is the width of this Bollinger Band is very, very narrow, and that means that the prices are likely to go beyond these particular Bollinger Band, meaning either the price is going to see a massive move to the upside or massive move to the downside. One particular theme which comes quite clear by looking at the weekly time frame, and the matter of a concern for investors should be that the 50-week moving average on the weekly time frame has fallen below the 100-week moving average. Now, this is certainly not very a strong sign in terms of a bull signal, and this could be an early indication that the prices may reverse their direction. Now, in terms of your support and resistance levels, your resistance level is right where the price is trading pretty much now, which runs from 30,513 to 30,715, 755. And in terms of a support, it is 29,024 to 29,226. As for the RSI, it is clearly showing that the prices are very much overbought. So more odds are skewed in favor of a downward move rather than an upward move. So if the downward move does happen, price does need to stay above the 50-day simple moving average. I know that our support zone is below and in between that. So if you like, you can certainly trade near the 50-day simple moving average, but for me, I think the better level of support zone is where I have mentioned them over here. All right, that's all for today, and I'll see you guys next time.